My name is Carrie Boring. I'm the founder and president of the Chamber of Digital Commerce. Today's session is titled The Future of Money, Innovative Solutions for Transforming the Global Economy. And today we have representatives from central banks and financial institutions around the world, including the Monetary Authority of Singapore, the Bank of Canada, the Central Bank of Hungary, as well as the World Bank and the IMF. And then we're also joined by a number of leading industry innovators from SDX and Citibank, the Maker Foundation, the Stellar Development Foundation, amongst others. I want to thank all of our speakers for being here with us today. In order to really understand the importance of central bank digital currency and the role it is going to play in the international financial and monetary system, it's first important to really understand the history of money and how far we've come in just one generation. I'm going to steal a quote or borrow a quote from the former president of the People's Republic of China, Hu Jintao, who said, "The current international currency system is a product of the past." And while we're here today with the Reinventing Bretton Woods Committee, I thought we'd just spend like 1 minute kind of revisiting what was the Bretton Woods system and what's happened since then. So in 1944, which was 76 years ago, after World War II, the Allied nations came together to agree on the global monetary arrangement for the post-war era. And what was agreed to at that meeting is that gold would be priced at $35 an ounce. The United States would serve as the reserve currency, and then all other nations would peg their currency to the US dollar, and they could legally demand gold from the US Treasury. So that's where we were 76 years ago. And then, of course, the gold standard was broken in 1971 when President Nixon closed the gold window. And then by 1980s, all industrialized nations had moved to floating currencies, meaning no gold backing or fiat currencies. So if you just think about how much the monetary system has evolved in just one generation, we can certainly expect to see more technology evolutions throughout the monetary system over the next generation, over the next 10, 20, 40, 60, 70 years. And that's where central bank digital currency and blockchain technology comes into the conversation, especially today when we have more access to more advanced technologies like the internet itself and blockchain technology, as well as artificial intelligence and 5G and quantum computing. We are living in an impressionable moment of history where we are seeing an international conversation around the future of money and how do we improve the international financial and monetary system. So we're pleased to be joined by all of our speakers across the next two panels, as well as our co-host today, which is the Reinventing Bretton Woods Committee.
Space of stable coins, crypto, and CBDC really enhance its capability of bringing folks into the financial system.
Thank you. Denelle, let me pass it to you to hear your perspective, and to all the participants, please do feel free to put your questions on the chat window. I will try and integrate those questions in the next round. So Denelle, over to you.
Thank you, Harish. Again, my name is Denelle Dixon. I'm the CEO and Executive Director of the Stellar Development Foundation. I love everything that's been said because I think it's all paints that picture of how we can use technology and this new technology to actually create this the financial inclusion that I think a lot of us feel like needs to happen all over the world. I think one of the most important things is what Stephen ended on, and that's the idea of the fact that this is enhancing the existing financial structure and the infrastructure that's there. It's not trying to supplant it. And that's so important because if you're trying to actually get everybody onto the same exact rails everywhere in the world and have them reinvent what they already have, it's not going to happen. But if you can integrate very seamlessly with the existing financial infrastructure in all these different geographies, it creates an opportunity for us to come together and to be able to build upon and to give value to not just the developers who can develop on those platforms, but also the individuals who can benefit from that development. So I think that, you know, what we're doing at Stellar is focusing on this notion of building this decentralized, permissionless platform that we can have lots of creativity from developers out there build upon, getting and enhancing that infrastructure that exists right now. The second thing I think is really important is that in order to make this work, you need to make that development simple and easy for developers, and also to make it cost effective for them. One of the worst things that you can do is create a platform that is very expensive to utilize for developers, because then those costs are transferred down to the individual consumers. And I think that's what blockchain can do. And I think it is already doing it today. We see just on Stellar the opening up of corridors between Nigeria and Europe, and Nigeria and the US, and also in Latin America and Nigeria, and lots of different corridors open. And when you see those corridors open, you see development of this creativity by these innovators in those regions that actually understand what the consumers there need, and they can build that. Not just consumers, but also what the businesses need in order to be able to get their money from one geography to another. And so if you think about development and how how blockchain actually works, it's actually very cheap for the developers to build on top of it, especially if it's an open permissionless network, so that you don't have to actually pay license fees or any of those things to make it work. So I think that's the second thing that's really important. And then the third area, which I think we sometimes forget when we're dealing with new technology, is in order to really make this happen, we need to make it so simple for the consumer or for whoever your identified audience is. And I think that sometimes with new technology, we focus so much on the newness and wonderful ideas that the technology offers, and forget that the user experience is the most important thing. And I think we're finally getting to that with blockchain, where we're actually focused on solving those user problems with UX designs in simple and straightforward and feel safe to them, which I think is a really important way to think through when someone doesn't have access to the banking infrastructure, and all they really want is to be able to put their money into a digital asset and maybe just hold it there, so that they don't actually suffer the inflation in the existing in their geography, or they want to be able to transfer that very quickly to a family member or to a business that they want to support in another region. They can do that, but you have to make it simple. And so UX design is crucial to be able to think this through. And just like in the early days of the web, it took us a bit to get to that really simple UX design. I think it took us some time to get there for blockchain, but we're there now. We have very simple wallets. We have simple ways to recover your passwords. One of the things that Stephen said is that the idea that you can have this autonomous and own your experience, and that you don't have to rely on a custodian to do it for you. But it's important that we think about that from the standpoint of, yeah, you want that, but you also want that to be simple. Because if you have to remember a 54-digit phrase or password to be able to access it, or to be able to get into your account, it makes it complicated. So I feel like we're moving in the right directions to be able to get to this idea of true financial inclusion by thinking about the end user, whoever that end user might be.
Thank you, Denelle. So Stephen and you both kind of highlighted these new developments in a sense have to be seen as building on the existing financial infrastructure, the integrating with the existing infrastructure. And then I think that's a point very well made. But in some of the country contexts which Poola was referring to, and then also more generally the developing world, the existing infrastructure has gaps and weaknesses, right? And which are being addressed through traditional approaches. So in that kind of a context, one of the biggest issues is related to ID, right? So are there any kind of fundamental requirements or enablers for these new solutions to work? Does the lack of that, is that a constraint? And in general, what are the other challenges you expect to encounter? So maybe I would request all the panelists to come in whichever order you feel comfortable, and maybe as part of that, Denelle, if you could also elaborate on your specific experience with respect to the Nigeria, Europe corridors you were mentioning. So that will also be helpful. So maybe Who wants to go first? Stephen, do you want to go first?
So ideally, it starts off with basic infrastructure such as internet, but ultimately ends up with cost efficiencies which drive incentive.
Yeah, I agree with that 100%.
Go ahead.
Oh, if you think about the idea that, and I'll use the Nigeria example, what we need is to be able to fill in some of the gaps would be these financial institutions all over the world who are interested and want to issue a digital asset based on their local currency. We have that in Nigeria. We have that with an institution called Cowry. They've issued an NGNT asset. We also have that in Europe, for example, and this is how this corridor became really strong, where there's an entity called Tempo. They've issued a euro asset. And so Cowry has customers that want to be able to, business customers that want payments from Nigeria to Europe. And so they've been, and then get that back. And the customers don't necessarily want to or care about how it gets there, meaning that they don't think about like the technology, the underlying stack that they're utilizing. What they want to see is that the money is leaving their bank account and ending up in the bank account of their vendor or their business partner in Europe. That's how it happens seamlessly, but they're using blockchain to get it there. Cowry is and Tempo are, but the end users don't actually need to understand the details of how that's working through. They can, but they don't have to. And so that's how you make these corridors work, is by issuing these digital assets and opening up the opportunity for these institutions to be able to transact seamlessly. So we see more and more of this happening in different geographies. In Africa, we see a lot of interest, and we've had we will later in the week we do our Q3 analysis for Stellar, the network, and we talk about how that is improved in terms of all these different banking infrastructures that have set up. So for us, that's the biggest and most important piece to put in play in all these regions. And then I have to just say, and I know I already talked about this, and then it's the ability to use mobile devices to be able to execute these transactions for the individuals if we really want to get to financial inclusion, because not all of them have the computers that we have access to, but a lot of them have the mobile devices, and so they can actually have all of these things transact very seamlessly on those devices. So I think with those two things, you can actually bring together a lot of opportunity to be able to solve this problem.
Thank you. Thank you, Aniko. Maybe just one quick question to both Stephen and then Denelle. Is there any particular regulatory or policy challenges you see for these solutions to really become integral in addressing the financial inclusion challenges?
Denelle, you want to go first this time?
Sure. I'll say that I think that the regulation, we've already seen that a lot of regulatory bodies and governments think of the underlying technology as very similar to the internet. And so we believe very strongly that that shouldn't be regulated, that is decentralized, and it's a makeup of lots of different computers all over the world, very much in the same way that the internet is. I think that the regulatory challenges that we have is getting regulators and governments comfortable with the idea that the digital currency is safe, and that they already know how to regulate money. They've been doing it for years and years and years and are exceptionally good at it. And so to get them to understand that all these financial institutions that are operating on the platforms are already regulated and are already seated in and have to comply with the local regulations that exist. So making sure that, and maybe there's gaps in certain countries, and those gaps might need to be filled by some regulation. But the notion that I think is really important is that there should be this trust and this comfort in the existing regulations that it's covering these entities, because they're touching fiat. They're touching fiat to convert it into digital assets. And so once they do that, you already know that they have a regulated financial institution in those regions. So I feel very strongly that as long as we continue to engage with regulatory bodies, that's something that we do at Stellar, that's something that other entities spend a lot of time doing. I think it's really important. It's what we did wrong when we were to figure out privacy on the web. We didn't do a lot of engagement, and we said, hey, we're the tech industry, we can handle this, and that was wrong. And I think now we're actually engaging and talking and having conversations and showing, and because a lot of this has to be that you can't just say trust, you have to say trust but verify. That's what we do with decentralized code. That's what we do with open source code. So I feel like the regulatory angle out there is just to continue these conversations and to really be comfortable that these financial institutions that are already touching the fiat on these networks are already regulated entities. So I'm excited to be able to have these conversations, and we do them quite regularly. And I feel like we're moving in the right direction with respect for it.